Good morning, everyone. Thanks for joining us this morning. My name is Susan Fox. I'm the Acting Executive Director for the Strait Area Chamber of Commerce. After several requests from our members to help them understand the Canada Emergency Wage Subsidy, we partnered with Cape Breton Partnership and Grant Thornton, and we're bringing you this Zoom video this morning. So I'll hand it over to Jeremy, and he'll explain a little bit of how this is going to work.
Thank you very much, Susan. Welcome, everyone. As Susan mentioned, I work with the Cape Breton Partnership, and we're very happy to partner with the Strait Area Chamber of Commerce on this webinar today, and we thank Grant Thornton for joining us. So what we would like to do is give you a quick rundown of this platform for those of you who are not familiar. If you look down below at the bottom of the screen, you'll see a tool that says Q&A. Throughout the presentation, as our guests, Rob Wadden and Patrick Leahy from Grant Thornton speak, if you have any questions, please just type them into the Q&A tool. We will see them, and at the end of the presentation, we will take a look at them one at a time and get them answered as we go. If you did send in your questions and answers in advance, we will try to have them read at the end of the presentation as well. If you're not seeing your question being read, please just re-enter it in the Q&A tool. You'll also see the chat function down below, so if you have any comments or you're experiencing technical difficulties, you can't see us or hear us, please just type that in there and we'll make sure that we get it dealt with as well. We now have 70 with us. Thank you very much, everyone, for coming. At the end of the presentation, we'll also have a quick poll so that we can gauge how today went and how to further improve these webinars as we go. I think that's about it, Susan. So if you'd like to introduce our guests.
Perfect. Thanks. Thank you, Jeremy. So this morning we have Patrick Leahy and Rob Wadden from Grant Thornton with us, and they're going to provide us an explanation on how we can navigate the Canada Emergency Wage Subsidy, as well as a few of the other government programs. Thank you, Rob and Patrick, for joining us, and we look forward to the presentation.
Okay. Can you hear me okay, Susan?
Yeah.
Okay, great. Welcome, everyone. And so there's a lot of detail here, so we will try to move through fairly quickly and focus on the most important aspects. So we will look at both programs for businesses and assistance for individuals. So the major program that we'll be looking at today is the Canada Emergency Wage Subsidy, the CEWS, which is essentially a 75% wage subsidy that was announced, which is a separate program from the temporary wage subsidy, which is a 10% wage subsidy, which is we'll run through that as well. And then Rob will take a look at the work sharing program, and then Rob Wadden will walk through some of the other government assistance programs around mainly around financing and rent relief. So if you look at the Canada Emergency Wage Subsidy, the CEWS, it's probably the most significant of the 4 programs that were announced for business. It's expected to cost upwards of $70 billion by the government, and obviously help to try and keep people on payroll and keep people working. The one thing about it, there are some very complex terms of it. So if you look at the legislation, and we'll run through these, but there's different, there's complexity in the various aspects of the wage subsidy when it comes to qualification and the revenue decline, and what's eligible employees, the limits that are associated with it. So one thing just to keep in mind, we have a lot of, we see a lot of our clients and businesses we deal with who basically, we'll talk to them and they think that they don't qualify, but if you work through the program, in some cases, they can qualify if they just use different methods that are available under the program for some of the determinations on the, for example, the revenue declines and so on. And like I said, we'll walk through that. So just at a glance, the wage subsidy, the Canada Emergency Wage Subsidy, basically it provides 75%. The subsidy is 75% of eligible remuneration, and that's up to a maximum of $847 a week. So if you have employees that are essentially, once they earn around $1,130 a week, they would max out on the wage subsidy program. There is no overall limit. So when we talk about the 10% wage subsidy, there's a 25% $1,000 limit per employer on that program. There's an application procedure, so there's 3 different periods, but under this program you do actually have to apply. It's not done through the payroll system or reduction in payroll remittances similar to the 10% program. Again, you do have to pay your employees. This is based on wages and remuneration that are actually paid, and then you apply to get a refund from Service Canada. And we'll talk about the different periods, and this is one of the complexities of the program. The actual program, the subsidy program, relates to payroll from March 15th to June 6th, although the qualifying periods are the calendar months, March, April, and May. So, and we'll run through those. So who is eligible for the wage subsidy? So basically, and this has been expanded. So an individual, so if you have including trusts, so if you have a sole proprietorship that's in business and has a payroll and paying employees, they would be qualifying. A taxable corporation, any registered charity, nonprofit organization, and partnerships. And the thing with partnerships, the actual partners of that partnership. So we do have many partnerships. For example, a lot of professional firms are organized in partnerships. As long as the partners are one of the first 4 groups above, and typically they would be individuals or corporations that would be partners, they will qualify for the wage subsidy. And then the last one, prescribed organizations, so that would include things like the Chambers of Commerce, for example, that would be eligible for the wage subsidy. What's not, who are not eligible are public institutions. So that would be including things like universities, schools, hospitals, those types of entities. So on the next slide, we're talking about the wage subsidy and how do you qualify. So there's been a lot of confusion, I think, over this and questions. So basically, you have to have a decrease in qualifying revenues in the period. And like I said, the period is actually the calendar months of March, April, and May. Because the COVID-19 pandemic hit in mid-March, the decrease for March is 15% as opposed for April and May, which is a 30% decline in revenue. This is a revenue test. It's not an income test. It is only on revenue. So you can have situations where your income may be substantially down, but your revenue is not down considerably, and you would not qualify, or vice versa. So like I said, right now it is a revenue test. And qualifying revenues, this is one of the most complex parts of this, and some of the options you have on choices. So, typically business, when they talk about financial reporting, they report their results on an accrual basis. But one of the options you have under this calculation for qualifying revenues is to compute on a cash basis. And so you say, what does that mean? So basically, for most businesses, cash basis would be essentially just factoring in your receivables. So your cash basis revenue for the purpose of the wage subsidy would be essentially taking your regular revenue as otherwise determined, you add in your beginning receivables, and you deduct your ending receivables for that month. So that's one of the ways we're seeing many businesses who otherwise would not qualify on an accrual basis because of the pandemic and the impact of it. They've seen their receivables increase dramatically in this period. And therefore, on a cash basis, your revenue would decline, although on an accrual basis, it may not. So that is one to certainly take a look at if you don't qualify under the accrual basis on the 15% for March and April. The other thing is for people with corporate groups, you can file on a consolidated basis or an entity by entity basis. Now, if all the entities that you have qualify, that's fine. You can take advantage of the wage subsidy in each of the entities that you may have in your business structure, but you can also do it on a consolidated basis. The reason you may do it on a consolidated basis is the fact that you may have entities that otherwise would not qualify, But if it's computed on a consolidated basis, the consolidated group would qualify, and therefore every entity within the group would qualify. So again, that's a calculation that you should, for anyone with a group, should take a look at. The other thing, there are adjustments, for example, on non-arm's length revenues. So initially these were to be removed. So you have a corporate structure, you have revenue going between essentially associated companies or non-arm's length companies. That revenue was removed from the calculation, and that's since been amended, where 90% or more of the revenues are non-arm's length in a situation. So again, these rules are complex, and you need to take a look at them and make sure that you kind of work through the detail, and that you're not missing out on the opportunity to take advantage of this wage subsidy. Just on the next, we talk about the period, the qualifying period. So I just mentioned this earlier. Basically, when we're talking about the drop in revenue, so this is a revenue decrease in order to qualify. For March, it's 15. For April and May, it's 30. There's two methods to actually, for your comparison purposes or your reference period, just to meet those tests. So one is just the previous calendar period. So if you're looking at March, you're comparing to March 2019 and so on. But you also have the option under a second method to compare to the average of January and February 2020. Okay, so, and this was essentially introduced basically to try and help businesses who are in growth mode. So even though they've been significantly impacted by COVID, they would have been in growth mode, and therefore their revenues would be significantly more than last year, but otherwise would not qualify. But if they take the average of January and February, that's a much closer period, and it may allow them to qualify based on the impacts felt by the business. Again, remember, this can be done on a cash or accrual basis. Once you select a basis, you do have to use that basis for all the periods. The other thing too, we talk about this a little bit later, but you do qualify. Once you qualify for 1 month, you automatically qualify for the next month. So if you qualify for March of 2020, you actually qualify for April, and then you would have to re-qualify for May. And so that re-qualification for May could be based on qualifying for April or actually qualifying for May itself. So again, once you qualify for 1 month in the period, you qualify for the next month on this. The other thing we mentioned is the qualifying period. So even though the revenue decline tests are based on a calendar period comparing March, April, and May, the actual wage subsidy is based on wages earned in the qualifying period. So for March, it's March 15th to April 11th, April 12th to May 9th, and so on, ending in June 6th. So although your revenue decline test, for example, in March is a calendar month, it really covers the wages paid from March 15th to April 11th. And you do have to, we'll go through the calculations and so on, but basically you'd have to make sure that you're only counting wages earned and paid in that period. So how is it calculated? So just quickly on this, the main component of the calculation is the actual wage subsidy part, and we'll run through that, which is 75% of wages paid up to certain maximums. If you have employees who you're bringing back on payroll but are furloughed, and are on paid leave, in those cases you can actually have the CPP and EI remittances covered under the wage subsidy program. Okay, so for example, if you look, Air Canada brought back 16,000 employees. I think WestJet brought 6,000 employees back when this program was announced. The majority of those, which were furloughed and essentially put on paid leave under this program. And then what comes off that calculation for the amount of subsidy is the 10% wage subsidy, and we'll run through that. The important thing about that is those wages are the 10%. Even though you may not have applied for that wage subsidy, if you're eligible for that subsidy, that amount has to come off your CEWS subsidy. Okay, so again, you will be required in order to reduce your claim by the temporary wage subsidy, and then apply either through reduction in your payroll remittances or by after the fact submitting a claim to the government to get that to receive that subsidy. The other reduction is work share benefits, and we'll talk about that program if you've taken advantage of the work share program. So the wage subsidy, like I said, this is the main component of the wage subsidy calculation, is the actual wage subsidy itself. And if you look at the calculation of the wage subsidy, what's important here is it's the greater of two calculations, okay? Basically, one is the 75% of remuneration paid in that week in 847. So we mentioned before, the maximum that you can get per employee is $847 a week. So once someone makes over $1,130 a week, their wage subsidy amount would be maximized, okay? Excuse me. The other is the second component is actually the amount you paid, and 75% of baseline remuneration. So the baseline remuneration is basically the average wages paid from January to March 15th. And what's important here is the fact that what this allows employers to do in some cases is bring employees back, or even on, in some cases on paid leave or furloughed, or bring them back and pay them 75% of their wages, but actually recoup 100% of that amount under the wage subsidy program, because it's a baseline remuneration test. Okay. So that is, there are some employers taking advantage of that. Now, the government has come out and said that they expect all employers to the extent possible, to pay 100% of pre-crisis wages, or the baseline remuneration. But obviously this is included in the calculation. So there are circumstances where if they're paying 75% of the baseline remuneration, they can recover essentially 100% of those wages, subject to the 847-week limits. Okay. There are separate rules or additional rules for non-arm's length employees. So if you are non-arm's length with the corporation, or you have a family member, let's say a parent or a spouse that controls the corporation, basically what it does then is it eliminates the first part of the calculation. So that first part is essentially deemed to be nil. And then really what it does is it limits the subsidy to the baseline remuneration, 75%. So what you can't do if you are non-arm's length, you can't increase the pay or the wages of someone that's non-arm's length and therefore take advantage of an additional wage subsidy amount. You're going to be limited to their baseline remuneration from January to March 15th, okay? Or the amount of remuneration paid. So again, for non-arm's length, if they weren't on the payroll in that period, there would be no wage subsidy available, because you have a limiting test of the baseline remuneration from January to March 15th. Okay. The other point here, and we get a lot of questions on this, is the definition of eligible employees. So one thing to keep in mind, if you look at the qualifying periods, they do have to be an eligible employee. And one thing there is, if that employee in that period, if they did not receive remuneration for 14 or more consecutive days in that period, then they would not qualify. Their wages would not qualify for the CEWS subsidy. Okay, and the reason for that is if they haven't worked 14 or more consecutive days, that means they would be eligible for the CERB, or the Canada Emergency Response benefit. And so if you hire someone back in the period, let's say 14 days after the start of that period, let's say the end of the end of that period, or the last 10 days of that period, even though you pay them in that period, their wages would not be eligible. Or if you lay someone off with 14 days left in one of those qualifying periods, those wages would not be eligible for the wage subsidy. Now, we haven't seen details on this, but it looks like the government will introduce something where if you're hiring back someone, that they will allow the person basically get paid and actually repay the CERB benefit for that period. Okay, but just keep this in mind when you're looking at hiring dates and so on, that to make sure that that you're not caught by this rule in the wage subsidy. So applications are now open. So as of April 27th, you could apply. Again, you do have to employ the employees first. Okay, so you do have to have the cash flow to actually pay the employees. This is based on wages paid. And we would, you know, this is a big one. I'm sure it's not a big one right now, but the expectation is that for if any of these programs are going to be subject to audit activity by the federal government and the Canada Revenue Agency, it is going to be the CEWS program because of the size of the program and the amount of money that's available to business. So we are encouraging all businesses who take advantage of the program to make sure that you have you keep all the supporting documentation for your qualification for the program, the fact that you meet the revenue decline test and how you calculated that you keep detailed records on your calculation of the subsidy, so the wages paid in the qualifying period, who the employees are, the fact that they're non-arm's length. And part of the application procedure is there is a form, RC661, that has to be filed, basically attesting to the fact that you meet all the qualifications to claim the program. So how you can apply, if you have access to My Business account on CRA, which business can get, you can apply through the CRA website, which is probably the easiest way of doing this. If you have a business representative, so we have many clients that are coming to us and asking us to apply on their behalf, often ask us to help them out with calculations and so on, and whether they qualify or not. And then if we have authorization, then we can file. Anyone who is an authorization, the business representative can assist. And there's also a web forms application with a web access code that you can apply for the subsidy for. So as I mentioned, in part of the calculation for determining the amount of the CEWS program, the 75%, the temporary wage subsidy, the 10% wage subsidy, has to come off that calculation. And this was the first wage subsidy program that was released in March after the start of COVID-19. And this program is essentially done through reducing payroll remittances. Okay. And who is eligible here? So one of the difference here, it's not just tax, it's not opened up to all taxable corporations. It's limited to Canadian controlled private corporations. The other ones are essentially similar, access to the 10% as far as who can apply. The only difference, and we'll talk about this too, is, one of the differences is the fact that the CCPCs or corporations would have to have access to the small business limit, and we'll talk about that in a second. So the 10% wage subsidy is a maximum of $1,375 for each employee. So that's an employee max, and once you hit that for each employee, they are limited. You couldn't take any more wage subsidy under this program, and $25,000 in total per employer. So again, a much smaller and more limited program than the CEWS program. If you have a corporate group, one thing it does not limit it among associated companies. So if you had 2 companies, 3 companies in a corporate group, you can multiply the $25,000 wage subsidy amount. That program goes from March 18th to June 20th. As I mentioned, it goes against payroll remittances, and it's taken off your payroll remittance that you would make related to your payroll deductions, but it only can go against income taxes, so you can't reduce it beyond the CPP and EI remittances that you're making as part of that. And if you don't, let's say if you miss filing for the 10% and you don't haven't reduced remittance and so on, you can request payments later on at the end of the year. you can transfer to next year's remittance, those types of things. But again, the important thing here is if you are eligible for this program, then this amount has to be calculated and taken off the 75% wage subsidy. And then you would have to go and apply for this program here. Just one other thing on this wage subsidy is it is important that the temporary wage subsidy is based on pay dates. So it's remuneration paid in the period. So you can have pay date, differences where you'll have pay periods falling into the qualifying period, whereas the CEWS program is based on remuneration earned in the date. So for the 75% wage subsidy, you have to take a look at the qualifying period, and you have to figure out the remuneration that was actually earned in that period, regardless when it's paid. But in addition, it does have to be paid in order to claim the subsidy. So the calculation is based on when it's earned, but it does have to be paid as well in order to claim it. So that's just a small difference that could have a little difference in the calculation. We mentioned that the temporary wage subsidy has a restriction on essentially for eliminating large corporations. So in Canada, once you have $15 million of taxable capital, and that's basically retained earnings and debt, you would have no small business limit, and therefore would not be eligible for the temporary wage subsidy. Again, if you have a corporate group, you're supposed to have at least some access to the small business limit in order to apply. So we did see some businesses actually amending corporate tax returns just to allocate $1, even though they didn't need it, a small business limit, to make sure they qualify for the temporary wage subsidy. And I mentioned this before, so I won't spend much time on this, that, if you qualify for both the CEWS and the TWS, you have to reduce the CEWS by the amount you're eligible for. And we will have employers, obviously larger employers would not qualify for the temporary wage subsidy, but will qualify for the CEWS program. And I'll just quickly go through this. The work sharing program, so until the government announced the CEWS program, there was a lot of business who looked at this program and took advantage of it. So basically, what this program did was allow you to essentially work share and basically have the difference that the employee who said, essentially, let's say went from 100% to 50%, working 100% down to 50%, and that difference in 50% was made up, he or she would receive employment insurance benefits on the other 50%. So when when COVID-19 first hit, there was many businesses who looked at this program as a way of keeping people employed without having a substantial reduction in their income, because of the fact that the EI program would make up, up to, I think, 55% of the difference. And again, since the CEWS program was announced, I think there's been less. This program has been less attractive because of the fact that employers can get back 75% of the wages. So I won't go through much detail on the work sharing program. If you are interested, there is detail there. There is they have streamlined this, so it used to be quite an application procedure to access the work sharing program. That has been streamlined, so it's now easier to access with Service Canada. And again, if you have any questions that, you can let us know. We can provide some information, but there are some details there. So again, we'll have questions at the end of the session. And right now, I'm just going to turn it over to Rob just to talk about credit access for businesses.
Great, thanks, Patrick. So I won't spend a ton of time on these programs. It's more of this is just for information. I think we want to make sure we leave some time at the end, because I think most people will have some questions around the CEWS program and the temporary wage subsidy program. So what we're going to just kind of quickly go through is the Canada Emergency Commercial Rent Assistance Program that was recently released, the Canada Emergency Business Account, some of the business credit availability programs through Export Development Canada and the Business Development Bank, some financing through Fram Credit Corporation, and the Canada Export Program. So the design of the emergency commercial rent assistance was to give 75% of rental forgiveness for small business tenants, and all the details haven't been released yet, but what it's supposed to be designed for is for rents that would have been otherwise due in April, May, and June of 2020. So how it works, it's available to commercial property owners. So that's important to note. It's not available for residential. This is just for commercial rents. A forgivable loan will be provided to the landlord for 50% of the rent. And then that loan will be forgiven if the landlord provides at least 75% rent forgiveness to any qualifying tenants. The remaining 25% will be paid by the tenant. But basically what happens at the end is that the landlord will agree to forego 25% of their rents. So one note, the application deadline for this is August 31st of 2020. So for the tenants who is eligible, it's tenants who pay less than $50,000 per month per location. They would have had to either cease their operations or have a 70% decline in revenue. So it's a big hurdle to get over to meet that test. And have a maximum of $20 million in gross annual revenues. NPOs and charities are also able to apply for the program. For landlords, it's landlords that have commercial tenants. So the mortgage loan is secured by commercial real property with one or more business tenants. And it's, as I said, it's for April, May, and June. The rent reduction has to be of at least 75%. And they must issue a moratorium on evicting those tenants if they're going to claim this program. They must have showed rental income for 2018, 2019. So you would have need to show that on your prior returns. And kind of subsequent to this program, there can't be any attempt for the landlords to recover any of that foregone revenue, that 25%. So for the process for this, the application is going to be available on the CMHC website. It's not out yet, but they anticipate it being released the middle of this month. So possibly by the end of next week, we might have some more information on that. And it's an application that's done by the landlord. So it's not something that's done at the tenant level. If you are a tenant in this situation, you can reach out to your landlord to discuss the program, but it's an application that they'll prepare. The Canada Emergency Business Account. So this has been talked a lot about. This went live about two weeks ago or so, and it was designed to provide some support for small business owners in meeting their immediate cash flow needs. So this program had a price tag of $25 billion when it was first announced. And what we know, so up to $40,000 is available per organization. And how it will show up on your accounts is as a revolving line of credit until the end of 2020. And at that point, it'll convert to a 5-year term loan. It's interest free till the end of 2022. And if the balance is, if you're able to repay by the end of 2022, they'll only make you repay 75%. So the remaining 25%, possibly, so $10,000, if you repay by the end of 2022, would be forgiven. And if you aren't able to pay by the end of 2022, then it'll be converted to it'll be a 5% loan with payments due for a 3-year period to repay that in full. So who is eligible to apply? Small businesses and not-for-profit organizations. Some of the considerations: you must have had total payroll in 2019 between 20,000 and 1.5 million. So when this was first announced, it was for organizations with payroll between 50,000 and $1 million. So they have expanded this program so that more small businesses could access it. You're required to have a federal tax registration number and hold a business account with a financial institution. So if you were just a sole proprietor with a personal account tied to your business, then that program will not be available for you. It has to be a business account that was held with a financial institution prior to March 1st of 2020. So the process, you apply directly through your primary financial institution. So it would be who the bank that you have your main business account with is who you would apply for. It's an online application. The biggest submission that's required is your T4 summary from 2019, which the bank will review to make sure that you meet the eligibility requirements. And then if approved, the money will be deposited in your account. So from what we've heard from folks, it was about a 5-day turnaround between submitting the application. That may be faster now that kind of the first wave is beyond us, but it is around, we've seen it be around a 5-day process. So the business credit availability program, this was to provide some small and medium-sized enterprises with working capital, operating credit, and cash flow loans. So there was $40 billion released in terms of this program. $20 billion of that went to the Business Development Bank, where they would be able to offer payment deferrals, working capital loans, some co-lending with traditional banking. And the other $20 billion was released to Export Development Canada, where they could offer some loan guarantees, export guarantees, and some credit insurance. So we'll talk about that. So the working capital loan program with BDC, this will provide loans up to $2 million for a 36-month term. It is interest only for the first 12 months, and then the loan is amortized over a 5-year period after that. You'll have normal payments of payment principal and interest for the next 2 years. And then at the end of the 36th month, there is a 60% balloon repayment required. So the balance of the loan is due after 3 years. Or at that time, you would look to refinance either with BDC or with your traditional banking options. BDC co-lending. So this is something where you would enter into some agreements with your banking where they would co-lend with BDC, providing loans up to $6.25 million for a term of 10 years. Again, this is the same where it's interest only for 12 months, and then they would determine further from based on the risk rating with your existing lender. It's underwritten where the operating lender would assess risk rating. And bank underwriting would be provided to BDC. So the application itself is with your operating lender, so it kind of starts at the bank level. And then the ultimate funding of this program would be 80% coming from BDC and 20% coming from your bank. Export Development Canada, so loan guarantees. They'll guarantee up to a max of 80% to the operating lender. And guarantee the loans for 12 months with an automatic renewal for additional 12 months. So this is, they expanded the mandate on this program to include Canada, both exporting and non-exporting companies. So there is a fee of 1.8% on this, in addition to whatever commercial loan pricing is set by your operating lender. And then the underwriting is completed by the operating lender, and then they provide that to EDC for further approval. The export guarantee program, so they can guarantee up to 75% of operating or term lending, up to $10 million. So that is another program that's available to guarantee some of the financing around exports. So the fees on this will be again based off the risk rating, the length of coverage, and how much financing is required. Another program with EDC is the credit insurance program, where they'll provide receivable insurance against specific foreign trade receivables. So if you're exporting into foreign markets, you might be able to get some insurance around these programs, where they'll temporarily insure receivables of domestic customers, and they'd also issue a higher risk tolerance based on COVID. So, and for a limited time, they've also offered to process for goods shipped, even if the buyer hasn't accepted. So if you are shipping and selling to foreign, you might be able to get some additional program through this insurance program. So all these BCAP programs are available to small and medium-sized enterprises. Again, the organizations would have had to exist prior to March 1st, and they'll do the proper or the typical risk review. So it's going to be issued to organizations that have viable business options, business models where any other financing alternatives have been exhausted already. So again, the processes are still somewhat undefined. Basically, any organizations that might want to tap into these areas should approach their primary financial institution first, and then at that point, if they aren't able to finance you through the normal programs, they would pass along to EDC or BDC based on the needs. Farm Credit Corporation, so they offer some payment deferral and some new operating lines to mainly around businesses that are producers in agribusiness or food processors that are facing a challenging environment right now. So they can offer up to a $500,000 revolving operating line for a term of 24 months, defer payments of both principal and interest for up to 6 months, defer principal payments for 12 months, and then interest only for 24 months. Balance must decrease to 50% of the authorized amount, so down to $250,000 at least once per year, and then either repay or refinance at the end of the program. So who is eligible to apply? Again, it's organizations that have existed as of March 1st. Significant portion of your revenue needs to come through agriculture or businesses related to agriculture. You don't have to be an existing customer of FCC. It's currently not available for businesses in hospitality, tourism, bars, full service restaurants, or cannabis. And it's going to be assessed by FCC on a case-by-case basis, and they'll do their normal due diligence on issuing any financing here. And then quickly, Help for Business, so corporate tax filing. So there was an extension for corporate year ends to June 1st. So if you were normally due between May 19th and May 31st, or March 19th and May 31st, they have extended the filing deadline to June 1st. They've extended the due date for payments that would have been due on or after March 18th. So if you had taxes owing normally at the end of March with a December year end, they've extended the repayment of that to September 1st. And they've done the same with installments for 2020. So again, they've extended the requirement to pay those to September 1st. Partnerships, they have extended a filing extension to May 1st for partnership returns, as well as some of the foreign reporting and elections to June 1st. GST, HST, so all businesses can defer remittances of HST until June 30th. So for monthly filers, this would apply to your February, March, and April remittances. Quarterly installment filers, your remittances for January to March 31st, extended to June 30th, and then for your annual filers, they've also extended for any installments required to be paid in March, April, or May. Help for individuals. So again, we'll quickly talk about this. This program has been out for a while now. So the Canada Emergency Response Benefit, providing financial support to employees who have stopped working, $500 a week for up to 16 weeks. And this replaces the initial program, which was the emergency care benefit and the emergency support benefit programs. This is for those who have lost their job or can't work due to a business shutdown, are either sick or quarantined, are taking care of someone who is sick with COVID-19, or they're at home without pay because they're required to care for their children. So there are some differences between EI. The processing time for the claims has greatly reduced from up to 30 days or more to 10 days. The dollar value with EI, it varies based off of your weekly earnings, but with the CERB, it is a flat rate of $500 per week, no matter what your income level was. The length, EI can be between 14 and 45 weeks. The CERB was for a 16-week period. And the payment with EI, it's bi-monthly. With the CERB, you get it once every 4 weeks. And in both cases, it is taxable. So that's an important note to make, because typically with both EI, normally they don't take a whole lot of withholdings off. So if you're not used to being on EI, or you're going to have other income in addition to the CERB, there will be limited tax deductions, tax withholdings off this income. So just important to note for possibly when you file your 2020 returns that there could be a tax balance owing as a result of this income. So if you're already receiving EI, you don't apply for the CERB. You can't apply for the CERB if your benefits end before October 31st, 2020. If you've already applied for EI, but your application hadn't been processed yet, do not reapply for the CERB. So Revenue Canada is streamlined just so they didn't have too many people in the system at once. What days you can actually apply for the CERB. So they've kind of chunked it out based off of your birth month, which you'll see laid out there. Of additional resources, we just gonna want to remind everyone we have a COVID-19 hub that we're kind of updating with information as new programs arise, or it's just other information that we think is relevant to business owners, whether it's preserving cash flow or possible tax planning initiatives. So again, that's kind of constantly updated. So we just kind of want to point that out to anyone to keep an eye on that. And that's the bulk of our presentation. So we did want to, I'll stop sharing the presentation and we'll open it up for questions.
Thank you very much, Rob. We actually have many questions, which is not surprising at all.
Okay. All right. So just I'll just go through the program. Or the questions there. So the first one: if I am an employer who presently pay their bills, however, if this keeps going, I could be in a situation where I will not be able to pay the bills. Should I apply for the $40,000 loan? Because if I wait, there may not be any more funds available. So basically what we're telling people is if you think there could be a need, go ahead and apply for it. If you don't end up like I said, it shows up as a line of credit. So if you don't end up accessing it or needing it to pay your bills, then great. But we are encouraging people that if they think there's going to be a need, that you should respond, or you should apply for this. So one important note to make is within the terms of this program, they say it should be used for kind of unavoidable operating expenses. So you shouldn't go and take it and invest it or do something like that. It should be for business expenses. So you will want to, in the case, we don't know how any of this is going to evolve, but if they do review kind of how you use the money, you want to make sure that it meets that criteria. The next question: can the wage subsidy be used for family members, spouses, etc., as most businesses around have family working for them? So this was a slide that Patrick had in there regarding non-arm's length employees. So if you have a spouse working for you, that would be a non-arm's length employee. So you would need to watch what their income was, what their average weekly income was between January 1st and March 15th. If they've never been paid before, then they're not going to be able to qualify. But if they've always been paid, then they would be eligible for the CEWS based off of the different restrictions that Patrick had outlined. Next, being a restaurant and having our reopen date this weekend, do we qualify for, it says the CEWB, I'm assuming that means the CEWS, so the wage subsidy. All our staff is rehired starting this weekend. All the staff had been laid off since late October. Our usual startup date is typically around mid-April. Do you want to answer that one, Patrick?
Yeah, sure. So can you hear me okay, Rob?
Yeah.
Yeah. So, so basically, in order to meet to be eligible for the subsidy, you would have to have, if you typically open in April, you would have revenue in April typically have revenue in April that you won't have this year, and therefore you likely will meet the revenue decline test, and therefore would be eligible for April and would be eligible for May. Obviously, if you're eligible for April but you have no wages, then that's not much of a benefit. But it would make sure that you're eligible for May, and therefore you'd be eligible for the subsidy, to apply for the subsidy after the end of the period. Yeah.
And the same another question from the same person is, and if we qualify for the wage subsidy, can we pay family members? So I think we answered that before, but basically, as long as they would have traditionally been paid, you can be paid. I mean, it might be a trickier where you have to meet that baseline remuneration test. I'm not sure if you've seen that, Patrick, on how that might work, because if they weren't working, they weren't open.
Yeah, sorry. So there are some items that need clarity. So let's say in that situation, they'd have no baseline remuneration for January 1st or March 15th. But I think people have assumed that let's say for a seasonal business, if those people, including the non-arm's length people, have always been employees, or are just going back to work on a regular basis like they have in past years, that they would be eligible. But that is something to be confirmed. And like you pointed out, they obviously would not be on the payroll from January to March. But that's something we can look into, Rob, and see if there's anything concrete. But I know that's something people are asking questions about that we haven't received anything on as of yet.
Okay, another question. Will municipalities rent commercial space be able to apply for the commercial rent subsidy for their tenants? And what happens if there isn't a mortgage on the property? Does that disqualify the landlord from making the application? I'm just trying to go back to that slide. Let's circle. We'll come back to that one. The question in regards to the emergency business account. So in 2019, we had more than $20,000 in pay, but most of it was paid to contractors through a T4A. We are a theater company. Artists are typically not engaged as employees. Am I still eligible? I think the answer would be no. It's probably something to discuss with your bank to see if that meets the criteria. But typically what we've seen is to meet that threshold, it needs to be as an employee paid through box 14 as employment income. I don't know if you've seen anything otherwise, Patrick? No.
So that's that's my understanding as well. And the other thing, I think this was a question that came in beforehand that we were talking about, was a similar example would be fishers who pay crew shares instead of employment income. So instead of paying like box 14 wages or employment income, the crew is paid by the buyer as a crew member. Those amounts do not qualify as wages either, and would not qualify towards the $20,000 that's required to apply for the CEBA program.
Okay, regarding the $40,000 revolving line of credit, could you explain what it is to be used for? People seem to think they can put it in a savings and give back $30,000 when it's due. So the guidance, they say, is that it should be used for non-avoidable operating expenses. It doesn't say that it has to be used by a certain purpose or by a certain time period. So, I mean, what we're telling people is that it probably makes sense to apply for. If you don't end up using it, then great. But if you need it to withdraw and just kind of give you that comfort in your bank account, because you don't know where this is going, then yeah, there's possibility that you could just use it, and only have to pay back the $30,000. You have anything else on that, Patrick?
No, just the same thing, Rob. So, I would, basically, I think what I would say, I would encourage people to take advantage of it. We would not discourage you from the fact that just because the business may not need that, those funds right now, but given the amount of certainty out there, the uncertainty as to when we will be allowed to come out of this lockdown, and what your cash flow needs may be, we are encouraging people to take advantage of the program. It would be there, like Rob said, it's a line of credit. If it's not needed, well, you can pay it back and take advantage of the forgivable amount. But I would not, just because those funds are not needed immediately right now, that would not be a reason to not to apply and take advantage of that.
Okay. Next question: are there any deadlines in applying for the CEWS? Is the subsidy retroactive? So no, there are no deadlines in applying for it. I think what we've heard is that the program will probably be open till the fall. So I've heard October. I don't know if CRA has released the official date, but there's not like a filing deadline for each qualifying period that you need to get your claim in by.
Yeah, I think, Rob, yeah, in some of the correspondence you see October 2020 as a deadline to apply, but I mean, that shouldn't be an issue for any qualifying business. Yeah.
Okay. 10% wage subsidy program. We did not, and we will not be reducing our remittances during the year. At the end of the year, CRA will pay the amount to us or transfer it to our next year's remittance. Two questions. One, what year end are they referring to? Calendar year end or your year end? So it would be calendar because it would be based off of you filing your T4s. So basically, if there was X amount of dollars that you technically over contributed because you should have been claiming through the temporary wage subsidy program, they would transfer that to your next T4 period. And how do we get the amount paid to us at that time? I don't think I've seen how that's actually going to work. They just said that there will be an application process to be able to get that money, but we don't know the particulars on how you'll actually claim that. Can you email a copy of the presentation? Yeah, we'll send that to the chamber and the partnership, and they can distribute it out to everybody.
And as a reminder to everyone as well, we'll make both a recording of this full webinar, including all the questions, as well as the PDF available to everyone who registered. And I believe both the Chamber and the Partnership will be placing both on our websites as well for further consumption.
And we'll send an email out to everyone with the attachments, links to the webinar as well. So, and follow up some contact information for Grant Thornton as well.
Okay. Next question. So Patrick didn't talk about this, but what about fishermen? Can they apply for the CEWS and pay their helpers? And if the helper is a family member? So again, that would tie to the similar question around the T4A, where with fishermen, the income doesn't show up as employment income. So right now there is a gap in the program. Nothing else, I think we talked about it, but nothing else you want to add there?
You know, like you said, just the whole issue between paying someone having the buyer pay them as a cruise share. So we are seeing some clients who are actually converting where previously they had the worker being paid through a cruise share, then are now issuing employment income, paying them like essentially land stamps in order to take advantage of the wage subsidy.
Okay. Was there something mentioned earlier in the presentation about being on payroll 14 days before to qualify for the CEWS? So what that was that if someone went 14 straight days within one of the qualifying periods without receiving income, then they would be ineligible to qualify for the CEWS program. So even if you look at the 4-week qualifying period, if you paid them in week 1, didn't pay them in weeks 2 or 3, paid them in week 4, they wouldn't qualify because they would have gone a 14-day period without receiving income. Next, if a business is unable to open and we choose to pay the employee even though they're not working, so just using it to pay the employee, do we have to pay remittances on this subsidy? How do you prove the employee is not working at the time? So yes, if you're paying them and they're not working, you would still have to do your normal payroll and pay deductions. Basically, the other options that are available when if you're qualified under the CEWS and are claiming under that program, you would be able to add to your claim your CPP and EI portions of their salary to increase your claim. And then again, you would have to follow that the 10% temporary wage subsidy program as well. So there's nothing you have to do to prove that they're not working. I mean, you're continuing to pay them; they're just not coming in. So, but you still have all your normal remittances that would be required, other than being able to short it by the amount eligible under the temporary program.
Yeah. So. Oh yeah. So sorry, Rob. So just based on the. Yeah, I think it would be similar applying for the program. You need to make documentation available that those employees were furloughed or on paid leave, and you wouldn't have to pay the employer paid premiums on those. Yeah.
In calculating the CEWS eligible remuneration, would you only include remuneration which would be recorded in box 14 of the T4? I think that's a yes.
Yes.
It would just be based off of whatever their gross income is.
Yeah.
So Rob, we have some questions that came in advance, if you'd like us to share those ones as well. And everyone, we do note that we've passed the promised hour, but we do want to make sure everyone's questions get answered. So please continue to stay with us as we get these answered as well. And apologies, Rob, if any of these questions are a little closely worded to those that were asked today. They are a little bit different, so they may not need an answer, but we'll ask them anyway. If a company meets the requirements for period number 1 and is approved for the subsidy, do they automatically qualify for period number 2, even though they do not meet the 30% reduction requirement for period 2?
Yes. Yeah. So we did go through that, but yeah. So if you meet the criteria for one period, you're automatically eligible for the subsequent period. So if we're talking about March, you meet it for March, you're good for April, but you then do have to do retest to make sure you're eligible for May before you claim that one.
This question is fairly specific, but does leave out which benefit it refers to. I'm guessing the wage subsidy piece. Candidates who are recent post-secondary graduates aged 15 to 30 for a full-time placement of 6 to 12 months in duration must participate in a STEM position, STEM, of course, being the acronym. Would you please be more specific, or I suppose be more specific is, can you elaborate your interpretation in terms of what would qualify regarding information and communication technology for this purpose? Very specific.
We can probably put some information together, maybe send that out to a specific person who would just ask that question. I don't have the specifics on that program right in front of me, Rob. I doubt you do either right here, but we can probably find that out and send something out. Yeah.
Excellent. Another question regarding EI. What happens if a business reopens and can't pay staff enough hours per week for them to qualify for EI, as most businesses pay employees based on a certain amount of hours per type? Or maybe they don't need all the staff that they hired in the winter and it's not as busy. Will staff be able to get EI either way?
I think staff, so they would qualify for employment insurance benefits based on the system that's in place. And if they don't qualify, they would be eligible for the CERB benefit that's right now is in place up till October. Right. So. Yeah.
Perfect. What kind of backup records should we be keeping if we apply and are able to take advantage of any of the benefits or programs in the event the government comes back later asking for further proof, documentation, etc.?
So I would just encourage people applying under the CEWS program, basically any working papers, so any supporting documentation. So if you have Excel spreadsheets or calculations, whatever you use, number one, to attest to the revenue decline, and if you have your accounting system or calculations you did, or just to to prove that, to have that on hand, and the other thing would be making sure that you document the payroll records and the actual employees and the status of those employees, to have that all available, and to have set aside so that someone, if it was CRA did request to look at those, that you would have that information and you wouldn't have to scramble around. So, and that shouldn't be difficult, because in order to do the actual wage subsidy calculation, you would need to do all those things. So it's just a matter of keeping that information and making sure you have it put together. Yeah.
Great. If an employee works for two separate employers, could both employers use a wage subsidy for that same employee? If not, how is it decided which can take advantage of it?
Yeah, so no,
Yes.
there's no issue in claiming the CEWS under. It's not like you can only claim it as once per being an employee. So it doesn't matter if you hold multiple positions. Each employer could qualify for the CEWS as long as they meet the other requirement.
Yeah, the only caveat on that one would be if both employers are non-arm's length with the employee, they would be maxed out on the $847 per week. So, for example, if you had a non-arm's length employee that worked for two companies in the corporate group, then they would max out on the $847 a week, even though they may have payroll spread across the two companies.
Great. If we made use of the $40,000 loan and after all is said and done, we didn't have to use it, is there any penalty? Does it affect the $10,000 forgivable piece? Sort of similar to another question, but maybe asks a question about a penalty. Is there any known?
Nothing that we know of yet. I mean, they haven't released really all the conditions around if X amount of dollars actually have to come out and be spent, and you have to support that. But they haven't mentioned any penalty. But I guess we don't know if there's going to be conditions on the forgiveness piece in terms of supporting how the money was used.
Okay. For the $40,000 loan, is there any penalty for paying the loan back early? How early can we pay it back?
So I guess again, you could go ahead and repay it tomorrow, but we don't know exactly how that's going to interact with the grant portion. So depending on if they put review procedures to see kind of how you use the money, possibly there could be issues with, did you really need the money if you were able to pay it back the following month? But I guess there haven't been specific guidelines in that to kind of sort out how long you need to, I guess how much of it you had to use and for how long, in order to make sure you still get the grant portion of it.
And the final advanced question that I have here, is there a deadline to apply for the $40,000 loan?
Not that I've seen at this point. I mean, it's open now, so if you think you need it, I would do it now.
Yeah.
And it looks like we have a few more questions in the queue. Rob, if you'd like to take a look at those.
So if this is the employee's first week of work now, do we qualify for the CEWS? So the qualification for the CEWS is going to be based off of the revenue test, is the first point. So you need to make sure you get there with the revenue decline, and then it depends on the period. So if, let me just say, bring up that slide.
Yeah, it's April. Well, the period is April 12th to May 9th.
Yeah.
So if they were off, so if you have, for example, if you hired workers in the last week, they would not qualify, their wages would not qualify for the CEWS because of the fact they would have been off for 14 consecutive days. So that's something to be cognizant of when you're taking a look at the eligibility.
Yeah. So if you meet the criteria for May, then their wages from May 10th onwards would be eligible, but you wouldn't be able to pick up this first week. So to receive the $10,000 forgiveness, what is the earliest you could repay and still be eligible for the $10,000 forgiveness? So again, they haven't released much in the way of the conditions around that. So so they haven't. We'll have to kind of wait and see what more gets released about that program. Next, so I was down more than 15% in March. Now down more than 30% in April. It is still early in May, but as of now, it looks like you might only be down 10% from the previous year. If I end up not being down 30% for May, would I still qualify because I qualified for the month previous? So yeah, if you meet criteria in April, that automatically puts you in for May. So that the May month would qualify.
And I think our last question is the one we said we would circle back to.
Yes, and I will circle back with Aaron off the call about that one.
Perfect. Great. And Susan, I think you had mentioned that you had one advanced question as well.
Yeah, it was from a fisherman, so I think it's been answered. So I think we're good for that. Thank you. And is that all we have for today?
Wow, a whopping 24 questions asked and answered, and over 75 who joined our call today.
That's awesome. So glad we did this call. I knew from the conversations we were having with our members that there was a definite need, and the participation in the call certainly showed that. So thank you very much, Patrick and Rob, for doing the presentation for us. And thank you, Jeremy, for facilitating it. We really appreciate it. We will send all the people who have registered, whether you made the call or not, to the the tape recording, and we will have it up on our YouTube channel and the partnership as well. They will have it on their website, and we'll have it on ours. And we do have a quite detailed list of links for the COVID-19 funding and programs. And we will also share Grant Thornton's emails and contact information so that you can reach out to them if you need assistance in applying. So thank you very much. Greatly appreciate it. And looks like we will be enjoying a sunny day, which we need here in Cape Breton.
Okay, thank you.
All right, thank you both, and thanks all for attending.
Thank you.
Very much.
Take care.
Have a great day.